All right, hello everybody. Welcome to another case study. I think I'm gonna make this one a public one. I want to talk about some cool stuff, and I guess it'll tie back to what we talked about yesterday with the GU scenario. But I actually like went ahead and found my DXY image. If you guys can see here, I actually found it. This was like this is like a predictive view. Like I obviously don't like it's too soon to assume this is gonna happen, but I just thought it was really neat. And like once I see it, I'm just like I'm gonna demonstrate it, and then like if it happens, it happens. And if certain things play out, then it would make sense to use this as like a guide, and then like if this then that to see if it's able to be capitalized on, right? So if you guys recall, I don't know if it was the previous case study or because I know I've shown it in like two case studies before this, but pretty much I was showing this, and this is kind of where we are now. Um, I anticipated pretty much dollar to go down, especially after the case that we had made, where we had a internal sweep, external sweep, and then obviously after the transition, then we kind of anticipated this to kind of go lower. Um, it actually went a little bit higher from when I first talked about it, but I don't think I showed it when I first talked about it. But not the point. Anyway, um, what we talked about yesterday with GU, right? And that's going to come into the two executions I'm in. What we talked about yesterday with GU, right? We were here, right? And we were pretty much talking about the possibility of seeing dollar reverse. Why? Not because the external structure is bearish from GU EU, but or not even because the external structure from dollar was technically not well, it was technically not bullish, but because we swept such a big low on dollar. And if we look at that, that's kind of still what's in play, kind of. We swept this low, and now we're starting to kind of stall out a bit, and it ties into the this Wyckoff bias, but this is just it's just for show, right? Like obviously, there's a lot of things that would need to happen in order for this to fully come into fruition. So based on that perspective, like you would need to see this fail, right? We would need to see this internal like fail, right? And then have a structural disruption in order for us to justify even the potential of this schematic to at least begin, right? And so due to that, right, I can't really assume that the Wyckoff bias is in play. Not until that happens, right? Which would be the internal CBOS and then structural disruption. But when we're talking about now with the tendency that I always talk about with you guys, and that's when we talk about sweeping any type of external liquidity, it would kind of make me avoid wanting to trade the continuation. And in short terms, because we've swept that major low, I'm sorry, this major low here, just because of that, we swept the major low. So I cannot really like I just don't think it's wise just due to previous experiences for this to be something that I want to play. Internal bear structure, continuation to the downside. If anything, I would expect the daily time frame to then trickle down into the smaller time frames. And by that I mean we sweep the low. So then the internal structure, if then we were to have like a bearish failure, then it would be relatively I don't want to say smart, but it would make sense more to take a disruption on the internal sense than a continuation on the external sense. And that's what brought us to what we talked about yesterday with GU, where we were considering, right? We were considering this to be structural disruption, right? We're bullish. We had a solidification of a low. Then the high is obviously internally there. And then because we had then the internal structural disruption again, right? Then because we broke structure, it kind of just it was viable to assume that this would go lower. So technically the bias was correct. It's just the timing was wrong. And unfortunately, right, what we were talking about yesterday, it's like we were pretty much, I believe, here. We were like somewhere around here, maybe on the M3 time frame. And this we were talking about pretty much what the difference of a mechanical system versus a discretionary system would be. And it would be just because you have that feeling of I have a strong sense of confidence that this is going to be a winner, but you cannot describe it. And like that's kind of like a big problem for me, just because I want to be able to describe it. Because if I can't describe it nor articulate it, then it's really hard to replicate. So what we were saying is like, because of this internal scenario, I was confident this would be bearish because of this coming down, but I was then having a feeling again of this is no longer viable because of this internal sequence, right? And so being able to articulate that stuff is like step one to really refining your models, because you can have two different LGCs, but the nuance with each model would dictate whether or not it's technically a plus or an A, right? And what do you mean by that? Well, now we can look at EU and GU last night, and these were the two scenarios I was looking at, right? There's with EU, right? What we said yesterday in the case study, it's like I didn't want to take internal sells here just because this liquidity, like, I mean, this order flow just looked way too consistent. It looked way too clean, right? There's no disruption. So if there's no disruption, then how can I play against the external leg, right? So we ended Asia session, but with Asia session, we also swept Asia high. But you guys know that I've said before, I don't want to ever give so much confidence into sweeping an Asia high unless other things happen. So this is one of those scenarios where we had relative equal highs, right? You could say what people say, engineer liquidity. Sure. We built equal highs, we swept equal highs, but more importantly, once you start to dive into the smaller time frame, right, we see the transition of price. And so what do I mean by that? We have low and too high. We didn't break this low, right? But we did have a CBOS internally, which means this is a solidified high. So now technically, right, because this low led into a high that swept the two equal a set of equal highs, and we then had a reversal BOS internally because this low created the high. Therefore, this is not a CBOS internally; it's a reversal BOS internally. Um, then I am justified to want to take the slower, right? And if I wanted to refine the zone, I really could have refined the zone as like this, right? But if we're looking at the move that led into taking out this high and the equal highs, that move started here, right? So that's why I'm using the entire reference point. And um, we then ended up breaking that low that we said, the reversal break of structure from the internal sense, and then kind of had the bearish move to the downside. So then second scenario was GU. And this is where a bit of nuance comes in, because there's two sets of equal highs being swept on two relatively similar pairs, which is EU and GU, right? Where we took out one high and we took out two highs. But these two highs aren't necessarily relevant individually, right? Like you could say I'm nitpicking this, but no, like I'm giving this value because there is another similar high. But more importantly, what's validating those as equal highs being swept is the being swept factor, which is then this, right? I don't think I didn't zoom in more, but we can come back to this. But if we are to zoom in here a little bit, we can clearly see internal highs are being swept. Internal order flow has also completed, right? But we haven't had the reversal break of structure yet. That's like the nuance here. That's a bit of a different sense, because there is the internal move that led into sweeping the highs, right? That's being taken out, but the entire leg has not been taken out. Whereas if we compare that to EU, right, the entire leg, not just the internal move, the internal leg, not the internal move, the whole entire move has been taken out. Whereas with GU, it's not there yet. So I believe it ended up breaking it, and that kind of validated the setup. Yeah, so it validated the setup, but I want to compare this to this, right? Like, let's see if I can actually just bring them both up. Whatever. EU, GU, M5 or M3. Here, okay? So there is a lot of similarities here, but there is a big difference where this is now what I mean by like this setup to me clearly looks so much better than this setup, but that doesn't necessarily make that one is better, because although one can be more conservative and one can be more aggressive, the aggressive one actually gave a better move than the conservative one. But really the biggest thing here is the option of if this, let's say this had swept this previous low, which it might have, but because it's so close, I don't really like, I'm not really um I'm not really gonna nitpick that. But let's just say this was to have swept here and then did the sweep and then had the reversal break of structure. That would give me so much more confidence than seeing how here we had the just pretty much the trend continuing, and then we had the internal reversal break of structure. But this is an external break of external CBOS, sorry, CBOS. So therefore, because it's an external CBOS, whereas here you had a solidified high be swept, whereas here it's just a continuation of an internal trend, right? That could give you way more confidence. But a lot of people aren't even gonna notice that nor care for that. And I think it's a very big deal, because if we note details like that, like let's say this was a solidified high that's being swept outside of the external bias, which is the same for both, they sweep equal highs. Then if we add let's say a detail of this move sweeping a solidified high internally to better the timing, then it could provide a better execution. Because I actually thought I was going to lose this GBPUSD trade, because this high technically is not solidified until we break here from the M3 cents. If we zoom in, of course, you could consider this a CBOS and it's solidified, but from the level 2 of that, that would be the low that led into the high, right? Whereas here, the low that led into the high potentially could have been solidified. And that means a lot. Little details like that could mean a lot. Why? Because just that single detail alone, having an extra solidified point that's being swept, whereas this is just a external CBOS, right? That could give this more validity. But there's obviously like trade-offs to that, because now if we zoom out a bit, one, right, EU was actually the more conservative scenario, whereas GU, right, was actually a bit more of an aggressive scenario, just in that sense. And not to mention, like, we had, right, we already had this internal range, which is where I had the 71% retracement, whereas here there's actually a break of structure that confirms this to be higher. So I'm now kind of having the extra aspect of like asset divergence, right? So that could mean, depending on how you interpret asset divergence, that could also mean that this one could be a little bit more conservative, or this could be a little bit more aggressive, or vice versa. But generally, the point I'm trying to make here is like that little detail along with EU, to me, in my eyes, in my lens, that made this so much more conservative, whereas that made this way more aggressive. Whereas now the only reason that this worked is because of the timing then of GBP and dollar, right? That's pretty much what withheld me from hitting the stop loss here, right? Because 9 times out of 10, if I'm just trading the CBOS externally, we're going to see this continue. And I know you guys have seen that before, right? Whereas here, it's actually like potentially a solidified high being swept, and then you have the transition. But the con to that is like now there's like the other side of it too, where we actually swept lows here and we didn't sweep lows here. So although this gave me a conservative entry, this gave me, I would consider this more of an aggressive entry. The aggressive entry actually gave me the result that I wanted. But does that make this better? Not necessarily. Like that still, I would still rather take this position over this one all day, because if we're looking at this from a longer scope, what are the losses of this quote unquote aggressive scenario offset, right, the difference in only taking a quote unquote conservative scenario, right? And the answer to that is obviously like nuance. It's individualistic. It's dependent on you. But that's like the beauty of it. Now the hard part of that is like, how do you test that? And it's like, okay, like if that's then ties back to our conversation from yesterday. It's just like, if your rules are not concrete and you cannot fully identify these rules to be literally identical with all of the trades that you're taking, then the data is swayed because there's room for discretion. So like that's like the problem that ties back that I want to solve this year. It's like, can I figure out a framework, a method to completely make concrete true rules? Because if we make true rules, then we can have true data, and with true data we can make true reflections, et cetera, et cetera, et cetera. And then if they are true, right, then realistically you would be able to automate this stuff, right? Because if you're able to test it and if you get real data, and then there's actually like, this is actually like a profitable strategy over time based on certain assets, based on certain times of the day, right? Then that's when you can start adding more details. Like if you were to even add maybe a trailing stop type of adjustment to the management, or let's just say you take a partials management system, right? Then the difference in those two, you should be able to calculate those two in your system. And like you can't, because there's just so much discretion these days. And you see what, so you see, guys, I hope you guys are understanding the problem that I'm making here, the problem with discretionary trading, because like if you cannot properly define these rules, then like your journaling, like it really isn't progressing you how you think it's progressing you. Because if there's room for discretion, then that means that your rules aren't true. And if they're not true, then you cannot actually identify them. You cannot actually articulate them. So, right, that kind of just ties up my little rant for today. It's just like I want you guys to, and this I don't mean this like in a bad way. I just mean like if you guys can reframe your rules and your concepts and your A plus setups, it's like what really defines your A plus setup as an A plus setup? What makes one sweep differentiate from another sweep? Like what types of conditions are there? Like are there conditions that if you look back are like are you have you did you notice this, or is there more things that you can notice, right? And then that just starts to make more rule sets, because once I do find a solution, then you will be way ahead of time. So um yeah, other than that, um I actually posted my trades in the Discord today. Let's see. All right, these are like both executions for EUGU. So you guys see the conservative did not hit one of my targets, but the aggressive one did. So technically the aggressive one in this scenario yielded a better result, but just because it yielded a better result right now, that doesn't mean that it's going to yield a better result over time. And like I said, if you cannot define that, then you cannot realize that. But it all starts with trying to really become objective of your trading rules, and like what is the first principles idea within your trading model or your trading ideas that you can pretty much break everything down to. And obviously my answer for that has always been market structure, because if you can break down market structure into pivots and then multi-level pivots, then you should be able to build combinations for concepts, combinations for models. And that's pretty much like my entire style, right? But yeah, if you guys aren't in the Discord, definitely join in. There's a lot of cool conversations that we have on here. And there's also a lot of people actually like being active and stuff. And I don't really see this much from many communities. So yeah, if you guys are not in the Discord, I don't see why not. And like I'm not really that hard to reach. So like if you send a good question, like I'll probably want to answer. So yeah, other than that, guys, I'll see you in the next one.